Ladies and gents, this week I learned something that might change the way you think about XRP, the crypto market, and even gold. If I tell you what's going on in the Federal Reserve System right now and how it connects to digital assets, you'll understand why this could be one of the biggest changes in our lifetimes when it comes to money. These events are so big that they will affect every source of value that isn't the US dollar: stocks, crypto, gold, silver, and even real estate. This information could not have come at a better time if you own XRP. This is not advice about money. Before we get into the specifics, let me say this. Check out my best-selling book, Find 100x Stocks. If you want a tried and true way to find life-changing chances, the kind of 100x investments that can turn small amounts of money into huge fortunes. It's full of texts, pictures, videos, and other things that will show you how to find these rare chances step by step. It's been pinned in the comment below this video. Now let's talk about what's happening right now. They are going to lower interest rates for the first time since 2025 in just 15 days. There is already a 90% chance that the rate will be cut by 25 basis points at the meeting on September 17th. But this is where things really shock me. The US 30-year Treasury yield is back at 5%, even though the Fed is getting ready to cut rates. That's the same amount as it was during the financial crisis of 2008. Take that in. When rates are being cut and yields are that high, it's a red flag that the system is getting too tight. It gets worse. The odds right now are that rates will drop by 50 basis points by the end of 2025. There is a 33% chance that rates will drop by 75 basis points. That would need 3 cuts in a row or a bold pivot. Yields are still going up, though. Interest rates on loans at banks across the country are still between 7% and 8%, even though they were cut several times last year. One thing this tells us, the Fed is losing its grip, and that loss of power is linked to a big issue: huge debt spending. The U.S. has sold more than $200 billion in bonds in just 5 weeks. Since investors don't want to buy, returns keep going up. The term premium on the 10-year Treasury, which is the extra money investors want for keeping long-term government debt, is at its highest level since 2014, higher than almost every year except for the financial crisis of 2008. That means the market is yelling, "We no longer trust your debt." In the meantime, real inflation in the U.S. is back above 3% and still going up. People are losing faith in the dollar, treasuries, and the way America handles its money. It's not just the U.S. either. Look around the world. Even though the Bank of England has cut rates 5 times in just 1 year, the UK's 30-year yield just went above 5.7% for the first time since 1998. The issue is growing around the world. Now, for the big question, why are yields going up when central banks are lowering interest rates? The answer is very easy to understand, but also very scary. People who invest money are losing faith in government debt. For many years, the plan has been to make money, run deficits, and take on debt, then hope that people will keep buying it. But making too much money has gone too far. Cryptocurrencies are losing value faster than ever, and people who hold them for a long time don't want to hang on to something that will lose value. Take a look at this. During the last 5-10 years, if you kept US dollars, UK pounds, Canadian dollars, or Australian dollars, you lost 20-30% of their value. Who in their right mind would keep hanging on to something that loses value when they could hold assets whose supply is stable or rising? Bitcoin, gold, silver stocks, and most importantly, silver. This is the reason why alternative investments are getting so much money. Gold hit $3,600 an ounce for the first time ever on Monday night. Many people have put a lot of money into stocks like the S&P 500. And crypto? Next. At the moment, some people are moving their money out of crypto to chase gains in stocks and gold. The story doesn't end here, though. That same capital will be put back into Bitcoin, XRP, Ethereum, and other digital assets as soon as those rounds end. Things get very interesting after that, because this is the truth. The only thing governments can do to keep their budget plan going is print more money. When there is too much debt, too high of yields, or a loss of trust, they step in to save the banks, print more money, and double down. There is no doubt that this is the biggest and most successful Ponzi scheme ever. But more and more people are becoming aware. Where do they run when they wake up? They try to get things that the government can't take away. This is why cryptocurrency is the best answer. It can't be made over and over like fiat money can. It doesn't depend on trusting states like bonds do. It is based on open markets that are open 24 hours a day, 7 days a week. Prices are set fairly by supply and demand. And most people still don't fully understand how XRP is positioned as a bridge exchange for payments across borders. Take a look at what's going on with banks right now. Rates are meant to be going down, but for real people, the cost of borrowing money is going up. That means that the APRs on credit cards, auto loans, and mortgages are very high. More people and organizations are questioning the system itself because of this disconnect. It's not as big of a jump to crypto when they do. A lot of money has already been put into gold and stocks. History, on the other hand, shows that crypto benefits first and more quickly. Cryptocurrencies like XRP and Bitcoin are designed to be scarce, while gold's supply grows every year and stock prices depend on how well companies do. When the world is full of printed money, things that are scarce become much more expensive. In fact, this is why I think we are at the start of a new wave, one that will take XRP and the whole crypto market to heights that most people still can't imagine. Let's go ahead. Because of this change is bigger than just rising prices, rising interest rates, and central banks losing control. We are really seeing a structural change in how value is saved and sent around the world. And if you know how all of these parts fit together, you'll understand why XRP is going to benefit so much from what's coming. Let's start with the 5% return on the 30-year bond. That number may seem like just another fact, but in the world of money, it's like a huge red alarm bell. It means that the government needs to pay more to borrow money for a longer time. Of course, everyone else pays more when the government does. Capital costs are going up for corporations, credit is getting harder to get for small businesses, and interest rates on home and car loans are going up for families. The whole economy is affected by this tightening, which slows growth and puts more pressure on the Fed. The Fed's plan is now easy to understand. As the system starts to show cracks, they cut rates to boost growth. But there's a catch. Rate cuts that happen when inflation is still above 3% are like adding fuel to a fire. It makes it so that the cost of living keeps going up, while savings and stocks lose value even faster. That's exactly the kind of setting where different things do their best. Gold has since replied, silver's also going up. In the background, Bitcoin and XRP are slowly getting ready for the next big thing. The pattern we've seen for more than 10 years keeps going. As the dollar starts to lose its value, smart money starts to flow into gold, then stocks, and finally crypto, as word spreads that digital assets are a better way to keep value than almost anything else. It gets even more interesting after this. XRP isn't just a way to keep value like Bitcoin is. It's an important play. Ripple has been building the tools that will allow banks, institutions, and payment providers to join and have faster, cheaper cross-border settlement. And the need for that kind of answer grows every time the world's financial system is put under more stress. Because banks are looking for ways to save money everywhere they can, because the cost of cash is going up. If you are a business that has to deal with higher debt costs, you want your payments to go through more smoothly and quickly. That's what XRP does. At this point, the old system is showing signs of weakness, while crypto gives both a way to store value and a way to get things done. That mix doesn't happen very often, which is why I think the next cycle will be much bigger than the ones in 2020 or 2017. Let's take a closer look at how investors think. Over the past 10 years, the normal saver has seen the prices of food, housing, and energy keep going up. They've seen their pay stay the same compared to costs, and they know that saving dollars is a waste of time. They are looking for lifeboats because of this. It proves that hard assets are the answer when they see gold at $3,600 an ounce for the first time ever. However, gold is bulky, tough to store, and moves more slowly than the web. Crypto fixes all of those problems and makes them even better by letting you program them, but it's not the same for companies like hedge funds, banks, and asset managers. These people aren't just looking for safety. They also want return, liquidity, and the speedy movement of large amounts of money. In this case, the way XRP's record is made really stands out. It's easy to see why institutions will eventually start using it as a real tool, not just a risky bet. Transactions are finalized in seconds, fees are very low, and money can be sent instantly across countries, and the first signs are already here. When Ripple wins a court case or gets governmental approval, or when a new payment path opens up using XRP, it makes it easier for more people to start using it. When you add in the fact that fiat systems are failing on a larger scale, you have the seeds for rapid growth. Take a look. The U.S. put out $200 billion in bonds in just 5 weeks. Think about what will happen if even a small amount of the money that is currently going into government debt is moved to other assets because buyers no longer think the risk is worth it. Not just millions or billions of dollars are looking for a home, trillions of dollars are looking for a home. If even 1% of that cash goes into crypto, there will be a lot more demand for XRP than we've seen in the past. That's why I keep saying it. You need to look at more than just short-term price changes. Yes, XRP could go through changes just like Bitcoin or Ethereum. Yes, cash may come in and go out as people chase gold or stocks, but there is no denying the fundamental trend. Money problems are getting worse, and more people are moving their money into cryptocurrencies. It's not just the US either. Take a look at Europe, where the percentage of debt to GDP is at an all-time high. Just look at Japan. For decades, yields have been intentionally lowered, but now inflation is beginning to hurt emerging markets have currencies that are falling against the dollar at very scary rates. As you look around, trust in currency is getting less strong. Changes are becoming more and more popular everywhere you look. This is where XRP stands out from the rest. It covers both sides of the issue. In some ways, it acts like a scarce digital asset, a way to keep value in a world where money is easy to make. It can also be used as a utility token to power real deals and fix real problems in the global payment system. The fact that XRP can do two things at once is what makes its long-term promise so amazing. Let's also talk about the point where people's minds break. As soon as enough people understand that dollars, pounds, and euros will always be worth less, acceptance speeds up. It's like a snowball going downhill. It starts out small, but as more people join, it gets much bigger. At some point, the snowball stops moving and turns into an avalanche. That's the way crypto is going. We're still in the early stages, so most of the money coming in is going to gold and stocks. But take my word for it, there will be a fierce capital flight once people see crypto break through barrier levels again. Of course, XRP will be one of the biggest winners because it is both useful and hard to get. Let's look at this in a bigger picture. The bond market around the world is worth more than $130 trillion. If just 0.5% of that moves to crypto, that's over $600 billion in new money coming in. When there is that much cash on hand, prices don't just go up, they change. It makes new floors, new stages of adoption, and new stories. It quickly makes something that seemed impossible seem like it has to happen. And the time couldn't be more important. It's clear that the system can't be fixed on its own as central banks get ready for more cuts, inflation stays high, and prices rise despite policy changes. So that's the main thing I realized. Rates can be changed by the Fed, the Bank of England, and the ECB. They can also print more money. But trust is what's really wrong. There is no strategy that can fix broken trust. A place where people move their money is becoming more and more clear every day. Stocks and gold both have their place, but the digital world needs digital wealth. The money of the future won't be gold bars locked up in vaults or bills stuffed under beds. It will be encrypted, instant, have no borders, and be hard to get. That's exactly what XRP and other assets do. The real story is the slow but inevitable flow of value away from fiat and into digital assets. The news is full of stories about rate cuts, bond auctions, and inflation numbers. And that story is just getting started. If you pay close attention to this story, you'll see a trend that keeps happening. People move their money to harder forms of money every time governments raise interest rates and debt levels to levels that can't be paid back. That used to mean gold and silver. In the digital world of today, though, it means Bitcoin, Ethereum, XRP, and other coins that are made to be used by a lot of people. Don't forget that this movement is going on right now. The facts back it up, so it's not just an idea. It wasn't a mistake that gold cost $3,600 an ounce. It wasn't a coincidence that record amounts of money poured into U.S. stocks. And it's not a chance that the number of transactions on crypto networks is going up. These signs show that capital wants safety, growth, and speed all at the same time. Let's focus on XRP once more, as this is the most interesting part of the story. A lot of people only look at crypto through the point of view of gambling. They ask, how much is it today? How much will it cost tomorrow? That's thinking about the present. What XRP does behind the scenes is what gives it its real power. Imagine being able to send millions of dollars across countries in seconds and not having to pay any fees at all. That's not like the old SWIFT system where transfers can take days, cost hundreds of dollars, and need many agents. What do you think banks and businesses want when their profit margins are being cut, when the cost of debt is going up, and when global trade needs speed? It's easy to see the answer. Ripple has worked for years to build the trust, relationships, and pathways that will make XRP a useful tool in the world economy. The catch is this. When a certain number of people start using XRP, it won't just be banks. It will be about regular investors figuring out that this is the type of asset that banks are going toward. When people figure that out, it will cause the same kind of shopping frenzy that happened with Bitcoin in 2017 and 2020, but this time the basics will be better. This is where the big picture and the usefulness of XRP meet. It's painful for the bond market to bear too much debt. The inflation won't go away. It's getting harder to trust central banks. Because of these things, money is moving away from fiat and toward investments that can't be inflated away. XRP, on the other hand, is at the point where theory and use meet. That is a place where most things never get to. Take a moment to picture what will happen in a year or two. Let's say that inflation stays above the goal. In order to keep the economy from falling apart, let's say the Fed has to cut rates more than once. Real yields go down because of this, and buyers start selling bonds. As they sell, yields go up even more, which makes it even harder to pay the interest on their loans. The circle gets faster as the government prints more money and issues more debt. A lot of money worth trillions of dollars leaves bonds when they are no longer safe. Where does it go? When the value of the dollar keeps going down, where do pensions, hedge funds, and family offices hide? Yes, they do put money into things like gold. They also talk about crypto, which is more important. Crypto is more than just a way to store money. It's what the next banking system will be built on. This is where XRP stands out. Bitcoin is like real gold. Ethereum runs the whole world. As a bridge currency, XRP makes it easy for money to move between countries. There is a place for everything. But XRP's place is in the problem the world is facing. There are broken payment methods in a broken financial environment. I should say again that the snowball example I used before is a great way to describe what's happening. The snowball is moving right now. More buyers are realizing that fiat is losing value, so it's picking up speed as more businesses start to use cryptocurrency. As more banks test, corridors start to spread. As it continues to roll, the snowball will reach a point where it can't be stopped. It turns into an avalanche. And you're already ahead of that landslide if you're seeing this. A lot of people won't understand what's going on until prices are much higher. They will only wake up after XRP has gone from less than $1 to more than $1, or when Bitcoin has already grown by 2 times. But people who can see the changes in the structure happening now will be in a much better situation. This is why I keep stressing getting ready. Do not worry, not hype. Just a clear-eyed view of what's happening. It's not just about trading, that's why. It's about getting ready for a wealth transfer that will last 10 years and involve trillions of dollars moving from one system to another. One more important thing, it's important not to underestimate how leaders think and feel. Leaders try to fix things quickly when currencies get weak, debts get bigger, and people lose faith. They print, they get away, they make things work for now. But each fix makes the problem worse in the long run. And each time they do it, more people look for other options. That's why I think the next few years will not only see a rise in crypto prices, but also a change in how important digital assets are to the world's financial system. XRP will be known for more than just being linked to Ripple. It will be seen as a strategic commodity that controls the flow of money around the world. As that idea changes, so does the price. Since markets aren't just based on numbers, but also on stories. When the old system is broken and the new system is here becomes the main story, money will come in faster than most people can think. It won't matter if inflation is 3% or 4%, or if yields are 5% or 7% at that point. It will matter that people no longer trust traditional money and now trust crypto. And XRP is one of the most obvious ways to make that change. There are probably some of you already thinking, that all makes sense, but how do I use it? That is the right thing to ask. Because it's one thing to understand the big picture. It's another thing to be in the right place. That's why I always say to have a plan before you buy something instead of just winging it. You want to know where to look, what to look out for, and how to find those rare asymmetric chances that can make small purchases into ones that change your life. That's why I wrote Find 100x Stocks, the best guide for investors who want to become millionaires. There are documents, pictures, and videos that show you step by step how to find the same kinds of chances I've been talking about here. It's pinned in the first comment below if you really want to get ahead of the game. Use my Robinhood link to get up to $200 worth of free NVDA stock. All you have to do is make a $1 payment. Yes, the moment you start, you become aware of one of the most powerful companies on the market right now. Along with the guide, I've also pinned that link in the comments. Those 2 tools are ready and waiting for you if you're ready to position yourself and stop just watching the system break and start taking advantage of the chances it creates. You don't have to wait for someone else to fix the system. You can fix it yourself. It means realizing that things are changing, and the people who move quickly will benefit the most. XRP is in the middle of this change. You have to decide if you want to watch from the sides or ride the wave.